Hi everyone, it is September 1, 2022, and you are watching the Small Account Challenge, wherein we deploy at most only $5,000 and we teach people how to make $100 to $1,000 if ever within a month. So can we do that? No? So okay, let's take a look on what we have been doing for the Small Account Challenge. Let's share my screen here. Wait up. Okay, so in our small account challenge, we are using eToro.com. Although we are also promoting the brokerage firm Webull. I would add into our comments later on whether you want to use our referral links in case you want to open an eToro account or a Webull account or an IBKR account. So those three are our preferred brokerage firms when we are trading the USA. Okay, so let's take a look on the eToro account. Okay, so we're seeing for the week, obviously, our strongest winner is uranium. So uranium, we've bought at $20. Right now, it's trading at 23.3. That is a 15% move, and you can see that I've invested $160. Since this has gone up 15%, we added some leverage here. Now, times 10 lever tayo. So obviously, that 15% gain became a 150% gain. And because we are very bullish on uranium, we have not took profit. We believe that, as you can see, there is a very strong outperformance of uranium. And the reason is very, very simple. The reason is the climate change guys have remembered and have realized that the way to basically break free from Mr. Putin's dominance in the control of oil and energy is to basically have more sources of carbon-free energy. And the answer to that is nuclear. In terms of nuclear, you have seen this week strong responses even from famous people like Mr. Elon Musk. So within the week, we've got Japan saying yes, a nuclear shift policy since the Fukushima nuclear explosion around 2011. So after 11 years, Japan has quickly shifted back towards reinstating a nuclear policy. Of course, Germany has also done in record time a nuclear policy shift. Southeast Asian countries have also discussed going to nuclear. So we are seeing the nuclear now as a ESG craze, similar to what happened about 2 years ago with the solar boom. Take note, though, that China has been a nuclear fan since 2011. Ever since the nuclear Fukushima plant, China has opened 50 nuclear plants already over the last 11 years. US only has 3. So US is also gearing up, and therefore, in normal parlance, with more countries opening nuclear power plants need uranium as a fuel. So that gives you uranium a 10x move. And given the lows, the bear market lows of uranium was about $13. We view that $23 has leeway to go as high as $30, $40, $50. Of course, over time, because you cannot just build a nuclear plant tomorrow, and neither will you buy uranium tomorrow. There are actually 2 companies that we prefer in the uranium space. We like Energy Fuels, UUUU, and we also like Cameco Corporation. These 2 firms are listed in New York Stock Exchange. There are a ton of uranium names listed in Australia, and they have all been going up after a few weeks because of this entire policy changes happening by multiple countries. Multiple pa. Sorry, doble. So sobrang daming buyers of uranium recently. And throughout the week, you can argue that the US has been very, very tricky. The US goes down, down, down after the Fed speech citing higher interest rates. And that has propelled people to get shy again away from the stock market. Although I would argue that from now till a few months ago, some stocks were able to generate higher lows. So from last month to this month, despite the S&P 500 going down from 4.3 to about 3.9, the market dropped, yes, you heard me right. The market dropped 10% in just 4 days. So Friday, Monday, Tuesday, Wednesday, Thursday na ngayon. So it will be 5 days na ngayon. We are seeing that despite the drop in the overall US indices, people have begun looking for select opportunities. Uranium being the biggest and best secular trends that they are finding out if they haven't found out. So I would argue that dips of uranium is being bought. So in terms of highlighting small account challenges, you want, or I would prefer, if ever there's dips, nagkakagulo naman yung mundo, that means that we can see uranium baka mag-drop ng 5%, 10% within the week. We might be able to get back in or get more. So my goal is to add more uranium within the week or within the month in case it drops. Kasi nagkakagulo like after a big surge on uranium names over the last month, then people might actually suddenly take profit. But the secular trend is intact. That's why we would be viewing 22 as the higher low opportunity in case it goes down. And then furthermore, if it drops near 20 pesos, $20, we will also see a buyer. I don't think that you can really buy $20, pero tsambahan na lang. 22 is perhaps the more healthy na possibility for us to get some uranium. So in case you're willing to buy URA, 22 would be a good chance to buy. 2190, 2180, thereabouts. So that's where I want to focus our eyes upon. Now, I'll also be focusing our small account challenges also, despite the fact that people are not yet people are still worried for good reasons on how the markets will be within the next few days. So let's also take a look at what the markets are doing even on the SPY level. The SPY, the S&P 500, the most important 500 companies. Okay, so the most important or most valuable 500 companies today with a market cap all leaning towards your Tesla, Apple, Amazon, Microsoft, Tesla, Google. So far, it has fallen down from 430 highs to about 395. That represents a 10% sell-off since about August 16. Okay, here at about 395, we see a potential support. And the reason why is because you've got all of them already trading at your 50-day moving average. So a 50-day moving average simply represents the average of company prices, last closing price, for the last 50 days. So we know that for the last 50 days represents roughly about 2.5 months. So that was about your June, July, August, and we're seeing that Apple might actually retest here at about 151 to 155. So that's just about 2 to 3% away from that last close of 157. Let's take a look at all of them. Apple, Amazon, trading at 126. We can see that this is a classic gap fill wherein Amazon, after rallying from about 101 to as high as 145, that was a blistering rally. And people today are still wondering on whether that is a bear market rally or a really bull bottom. I would argue, guys, that because it is too, looking at broad sectors, no, we're not just talking about Apple or Amazon. Looking at broad sectors, a majority of the company reports recently has shown resilience despite this inflation rates of about 9%. We've seen actually labor actually growing. Unemployment is getting curtailed. So I would say that I would say that the US market is quite selective, highly selective. Some companies would be going new lows and nobody cares about that, while some companies are actually actively being bought. So just to give you a preview of companies that are being bought, let's go through some charts here. So so far, I'm gonna say that we are actively seeing Disney hitting higher lows. So you'll notice that aside from the fact that Disney has really fired on all cylinders on rising very much in terms of fundamentals, we see that the market has also given Disney the benefit of the bulls. No, the bulls are able to make Disney go up from a low of 90 to as high as 112 now, which isn't the same with the SPY. Kasi from July, the SPY or the S&P 500 only managed to go from 375 to 395, giving you an outperformance rating for your Disney. So take a look as well. Airbnb has been outperforming, and what we are clearly seeing now is that the market is willing to pay higher low, not a retest, towards companies that have delivered the growth. Revenue of Disney and Airbnb did very well, and so we would be happy to still continue adding into Disney and Airbnb, whether you have it or whether you don't have it. Our goal is really to buy some of that. I will also try to answer your questions on the oil. Okay, there's a question. The price of futures of oil price to the end of this year. Okay, let's answer your question first. Oil is, of course, a hot topic here, and a lot of people are looking at oil. Let's take a look at crude oil per se. Indeed, this week we were also looking in oil. Last week, there was a news of Mr. Who's the name of that? The Saudi OPEC, the head, was saying that they were gonna curtail the supply in terms of production. That will, syempre, if they would produce less oil, then that would curtail the kung konting oil, di aakyat yung price ng oil. So we can see that it set a floor. So far, since that announcement about last week, mga August 22 yata yun, we did see that US oil rally from 88 to 96. Right now, it's a retest here at 88. There are still a lot of bulls because the bulls are saying na structural deficit on oil and demand is not waning simply because the world has reopened. More people are flying, more people are moving out and about. So you've got that demand on oil intact here at about 85, 88. We do have bullish views on oil. And in terms of oil, I have actually been buying a lot of oil-related counters, but only on dips. So it's a buy and sell move for oil. You can see na 88, nag-96, ngayon bagsak ulit to 88. It could go even as low as 84. For those looking to buy oil, 88, 85 is a good entry point. Looking to sell, of course, 95, 96, nearing 100. That would be my stance for oil. You just need to buy low and then you sell high. It's not going to go too far, but at the same time, let's also notice the strength of the energy stocks, no? Energy stocks have been the go-to sector this year, owing to the fact that oil prices has made all of the companies like your top 10, ExxonMobil, Chevron, ConocoPhillips, all making breakout earnings for the year, no? Not just this year, but also since last year. So that is a continuation of their momentum. And XLE has really benefited the energy sector. 70 stores as high as 84, or a 20% jump over just a few weeks ago. While the market was going down, the energy sector kept on rising. So that is a very strong outperformance. So far, from a high of 84, it has slipped back to 80. It can even go to 75 or 77. So if you're looking at XLE, my sense is that if you're looking at oil, any dips of about 5 to 10% from here, whether you're looking at the ETF, XLE, or you're looking at oil per se, 88, those are attractive buys. I would agree with that. We're also looking at companies like VET. This is Vermilion Energy. This is a shale producer, so you're looking obviously on oil and gas drillers. I would agree with that. So oil and gas driller VET has been giving a 36% free cash flow based on their price. So that is a high return on equity. And so I think this is the reason why it continues to be trading at a very high price. So this one is going to continue the momentum. Any price below 25 would be bought. It has pulled back from 30. It's now trading at 26.7. It can even go as low as 24, 25. But we look to buy here near 20, even as low as 23. So between 23 to 25, if Vermilion Energy goes down, look to be a buyer of VET. There is a question, $70 to $80 by end of the year for oil. I would be I would bet less on that $70 to $80 by the end of the year, because $70 to $80 means that there is a demand destruction, which I don't think is really happening worldwide. For oil to be hitting below 70s, that gives us back towards pandemic when all the malls were closed, all the schools were closed, all the stores were closed. I don't think we are having a lockdown anytime soon. So I would disagree with the $70 to $80 call on oil. That comes from the production inventory deficits that we are looking into the oil space. Yeah, I can show you some data if you prefer. Let's see. I think I have it here. Let me show you a few data. So, yeah, so we are bullish on oil on dips. I do believe 88, 90, that is a floor. I don't know if I have it here. Yeah, so this is the reason why. Let me share to you a few things. So this is coming from 9 Point Partners, but also from the IEA, International Energy Association of USA. So in the USA, you can see that one of the biggest bull market factors is really the oil rig counts. You've got the rig counts less, i.e. your production is less. And you've got, of course, in terms of barrels of oil being produced per day, it's just about 10 million. US discipline is the new normal. We are in a post-US shale hyper-growth world as companies are focusing on returning capital back to shareholders versus production growth. i.e., what you're seeing really is that what you're seeing clearly is that ExxonMobil, British Petroleum, these companies are returning their billions of dollars of profits towards the shareholders. That's why there's super high dividends in the oil plays, similar to what Occidental, Devon Energy are doing. So that is actually gonna curtail your production. And if your production is less and your demand stays the same, you will actually have an $80 to $90 oil even end of the year. So that's my prediction based really on just the statistics of inventory deficits. Let me answer this question. Do you think shipping industry will bounce back soon? Like Zim Shipping, Starbulk? Um, yeah, actually recently there is this conundrum happening within the shipping sector. Shipping sectors are mostly all generating a lot of profits and yet and giving high dividends, and yet they're going down. So far, I think Zim, watch out at 35, 34 if it will get bottomed out. Your question is, of course, Starbulk. Starbulk is, I believe, a dry bulk shipping company. We thought actually that the 22 support will hold, but it actually broke down to towards 1920s. So far, we have a hold. Ako personally, I have a hold play on shipping sector, as I think that the dry bulk and the shipping related is very much being. Oh, sorry, I didn't share pala my screen. So let me share to you that. So yeah, Starbulk here is about trading at 18s, 19s now, which has been the 2021 areas of support. These companies, in case maipit ka, just in case, it does give really lavish dividends. So for instance, in 2021 alone, this company for Starbucks, 30 cents here, 70 cents here, so a dollar 25. So just last year, nagbigay na siya ng $2.25. This year naman, nagbigay siya ng 2, 3, 165, 165. So one of the reasons I believe that the market has been selling off Starbucks is really sometimes a function of the huge cash dividends. Kasi most of these companies are giving more than 40-50% of their extraordinary earnings all going towards dividends. So that might have a playbook on why it's falling a lot. Then again, I do think that the dividends will remain heavily in favor until next year, 2023. Why? Because most of the contracts of these dry bulk is already contracted 2023. And all of them are trading, as I repeat, nasa mga 1 to 2 times PE. Like for Zim, it's trading at about 2 times PE ratio. So I wouldn't be too bearish on it. Medyo nagtataka rin ako, but I think it has to do with the dividends because the dividend package of these shipping industry is too big. Sometimes the market is thinking na sell first and then they'll buy it back later. There's that tendency. So tingin ko more of that. HP is Helmeric Pain. Helmeric Pain, ganun din eh, no? So I think you're about 44, nag-steady lang siya. It has been giving dividends. You can see naman lahat yan, ang lalaki magbigay ng dividends eh. So consistently giving that 25 cents dividend every year. So $1 siya. So yung iba, very extraordinary yung dividends. That's why it is collapsing faster. Like Zim, it has been falling the same amount as the dividends, if not bigger. For Zim, grabe. It fell from 50 to 35 after giving a $5 dividend. So others would argue, uy, ang laki ng discount, given that it can perhaps give another $5 dividend next year. So at 35, 5 versus 35, that gives you more than 15% yield. I think margin of safety is fine with Zim. If you are bullish on Zim, hold on to it. Baka nga 35, if it bounces, you might see people start stepping in. I think the big problem of shipping is that it is a cyclical business. So a lot of people are concerned that the triple-digit growth and the earnings of these shipping is probably gonna peak somewhere in 2022 or 2023. That I think that's a concern, but because the valuations are so cheap, I don't think that the concerns are really bearish. Oh, hi. Thank you, guys. Traders from TD Ameritrade. Hi, thank you. Where do you get information about USA? Google. So all the information comes from Google, from company information. Sometimes I use finviz.com. It's very helpful. Yun. Thanks for watching. TD Ameritrade is a very good brokerage firm. The only reason why I use Interactive Brokers is that Interactive Brokers has a very cheap margin versus Ameritrade. Ameritrade, I think, charges 8 to 10% if you are doing margin rates per year, whereas IBKR is about 3%. So yun, that's a main diff. Okay, Webull is cheap Also, zero fees. If you're from Singapore, anyone here, Filipino watching from Singapore, try opening a Webull account. Just download it from your Apple, Google App Store. We will link to you all the referrals. They give about $60 of or $100 sometimes of free either Microsoft, Amazon, Google shares once you open an account. IBKR also gives those referral fees. I think IBKR gives $200 depending on a certain tier of deposit. Yon. eToro, I don't know, $50 free. Free. Yeah, so mga referral. Anyway, I have all the referral links. I'll just throw it out in the YouTube comments. Please use our referral links in case you haven't opened your brokerage firm. Speaking of, so sa small account challenge, let's just go through again. So I've been seeing that the Disney, the Airbnbs are getting higher lows. I'm also seeing solars like Sunrun, SunPower, also higher lows. So the fear that it can fall another 10% from here is valid. I would agree with that. But so far, the fact that the solars and the nuclears are getting a higher low instead of a retest is telling me na people are already starting to bottom out or bottom fish towards this ESG craze. And the climate change is a secular trend. So if you are looking to buy any company in the US market, I suggest focusing your eyes into the solar club or the uranium club and still even the energy oil club. For shipping, I am also contrarian buyer there. But I think for shipping, we are fundamental contrarians, but technicals is against us. So if you are a technical based trader, you will not buy shipping yet. Now, speaking of, let's talk about some growth names here. Growth stocks are also punished. But the thing that I would say why I've been bullish on C Limited here, C Limited is now trading here at about $61, $62. So the thing about C Limited is that it is just 10% away from its all-time low here in the year of 2022 at about 56, 57. It could fall 5% or 6% further, no? Or it can. And then there's a heavy resistance here at about 75, 77, owing to the fact that e-commerce, well, actually, the e-commerce is growing, but the revenues are growing, but the costs are also growing. So the market was very unhappy for seeing C Limited losing $900 million this quarter. A big portion of that loss came from general and administrative expenses. That's why you're already seeing Shopee already decline a lot of job openings, and they're actually retracting a lot of the hires that they've made. So I think that just like Snapchat, Coinbase, who overly expanded their human potential, or what do you call this? The HR group overemployed. Nowadays, they're trying to lower their operating expenses. That I think is gonna translate to savings of at least $500 million next quarter, which will actually be a positive or a beat of expectations next quarter, next 2 to 3 quarters. So I'm bullish on C Limited because your downside is about 56 and your upside is 75 to 90 or even 100 if ever they deliver the cost efficiency, which they have been promising last quarter. Another thing to note is that C-Money, which is their digital fintech, is now hitting 5 billion in terms of total payment volume. And then they're hitting $1 billion of gross profit in terms of EBITDA. So I like that part of the business which people are underappreciating. We also think that the market today has been pricing in heavily on the negativity when it comes to interest rate hikes. They know that this September, the Fed is saying all out that they will contain inflation. But I feel that what's going to happen is that with the interest rate being priced in, we used our DCF models na rin, using 12 or 15% interest rate in your computation. Your Googles at about $100 would probably give you at least a 20% upside in the year, short term. And then if you're correct that even on a base case of just growing what they've done at a low rate of about 10%, which is really not true because digital advertising doesn't really just grow 10%, that will give you still a 100% return on Google, say 2026. So between that or bonds, I would say, and I would argue, a lot of fund managers are already deploying despite the knowledge that we are in a recession. Because this is actually just a garden variety recession. This is not like some 2008, 2009 global financial crisis type of recession. Um, you will see the market voyeur. The market is very sentimental nowadays. Every word, every speech of Mr. Jerome Powell is being overblown. You wouldn't be having an easy time. But I would say that now until November, which obviously is the midterm elections, my stance is seasonally, yes, September, October, you don't have much of the volume. So sideways yan. But as we know, after Halloween, after October 31, sipa na yung market. November, December. So if everyone knows that by November, December, January, February, you've got the big moonshots yet again on the market, I would argue that some people would buy this September a seasonally weak or a sideways season. They'll buy up the good companies already since priced in nga yung mga weakness, and you're gonna start seeing a recovery somewhere in about October or November. Unahan before the midterm elections. We'll see how that plays out. I obviously like the fact that a lot of companies today are going higher lows, and then even those that are retesting the lows owing to the negative print of their quarters. C Limited obviously had a negative print during the quarter, kaya siya binagsakan. But it's already just consolidating. The fact that this week, S&P 500 fell down 10%, but SE is just sleeping here at about 60, minsan nagsi 70, 60 to 9, 60 to 70, it tells me that it's just consolidating. So I would say that weak companies are already consolidating. The strong companies are higher lows, and the even stronger companies like uranium is already showing the leadership strength. So if you're gonna be technical about it, highest performance should be uranium, number one. Second performer would be the solars and energy or shale. And last but not the least, try to look even on the improving metrics on the growth names. So Airbnb, Disney is a slow but steady performer. You've got Google, you've got Meta, even Facebook. Obviously, last night Facebook was happy because Facebook was going up because they introduced ordering some vegetables using your WhatsApp. So they integrated with GeoMart of that's an Indian e-commerce company. So there's I think a ton of underappreciated opportunities. And what we like to say here in Awesome 10X is that you want to invest in a recession. And if 2022 is a recession, you don't actually close your eyes. You look at companies that are actually doing well, and you actually fire a few investments, even if it can go down. So at $70-$60 of C Limited, it's probably already so it's down 80% from its peak. And usually, historically, a company dropping 80%, we also check this, even in the NASDAQ bubble of 2000, 2001, companies dropping 80 to 90% have fully priced in the financial collapse. All that will happen within the next 6 months is either you break even or you make money. You won't see actually a significant downside. So because of that, I would argue na we're just holding, buying and holding na kami. We're gonna trade some of those uraniums, some of those energy, yun yung momentum plays. But I think that it's safe to buy high quality names. If you're looking to buy your Metas, your Googles, start just investing a few $100s. Yun. And the booking Airbnbs if you like to play the travel place. Sige, thanks everyone. And I'm happy that you're watching. Please don't forget to like and share. And please don't forget to also subscribe and open an account with our partners, eToro, Webull, and IBKR. Well, they're not really partners, but we use them. Sige, yun lang. Bye-bye.